Have you ever wondered why the market reverses immediately after you enter a trade? It's not a coincidence, it's smart money at work. And today, I will be revealing the exact reversal setup banks never want retail traders to understand, because once you master this, you will stop being their liquidity. I am Mr. Joshua that makes traders and also teach traders how to trade the smart way. Welcome back to my channel. This is smart money reversal setup that banks don't want you to learn. And the full video will actually be mind blowing. Watch this video to the end. Don't skip any part of this video and watch how your trading ability will actually shift. Now, these setups that I'm going to be showing you will help you to spot where institutions trap traders, grab their liquidity, and reverse price with sniper precision. Well, because this is their work, and most times retail traders are their target. Retail traders are their liquidity. Now, by the end of this video, you will know exactly when a reversal is about to happen, where institutions are manipulating price, how to enter with accuracy, and how to avoid fake moves that wipe out retail traders from the market. Now, let's dive into what we have for today. First thing is we need to understand why smart money create reversals. Now, bank and institution don't just trade, just like retail traders. No, they manipulate liquidity. They manipulate the market. Now, look at they manipulate the market. That's their agenda. Now, look at I entered this trade and you see it has been rejecting, and it's actually a perfect trade. I entered it at the perfect position and it has been rejecting. Look at it here. It has been rejecting. And I'm not giving up because my confirmations are clear and the price must return back. Now I have to show you this because normal traders will not show you when they are on loss. They will only show you when they are on profit. That's what most traders used to do, which is actually wrong, because it's not all the time that you'll be on profit. In fact, when you enter a trade at first, it becomes a loss before you enter profit. Now, this is what I'm struggling with this morning as I'm doing this video. Now, this is a live trade, my money, and I'm showing you live. I'm showing you live. Now, like I said, that banks and institutions don't just trade; they manipulate the world, the market. They manipulate liquidity, just like what is happening here now. There is manipulation. Later on, the retail traders will be affected and they will think that the market makers or the market is actually against them, not knowing that it is the market makers that is manipulating the market and not that the market is against them. Now, before reversing price, they usually give these things. The first one is they push the market into a fake direction. Now, this is actually the fake direction now that we're watching. Now, they are busy pushing the market this morning to the fake direction. Now, what is the aim of them? Is so that they can trigger stop losses. Now, people put stop losses. Now, they move in that direction in order for them to trigger people's stop losses and then to trap impatient traders like the scalpers, those that don't have patience, just want to make profit and get out from the market. They will definitely trap them. Now look at it. At this particular place, there are stop losses. There are stop losses. Many liquidity is located at that place. Now, there are So sorry, please. So sorry. Um, the mic actually stopped working, and I do not know. So, like I said, why do we need to understand the reason smart money creates the reversal? And the first thing I mentioned was bank and institution don't just trade; they actually manipulate what liquidity. And I said before, reversing price, they usually take note of some things, which is to push the market to a fake direction. And I was using my trade, my life trade, as an example, and then to trigger retail traders stop losses, and also to trap impatient traders. After trapping them, what they do is to now build a sell and a buy position at the discount zone. Now I have a video on discount zone. If you have not watched it, please, I'll try to put it at the description section of this video so that you will watch it and know what a discount zone is. It's one of the intermediate course that you need to watch as a forex student. Now, I said that a reversal is not random, but it is what? It is engineered. That means it is made to happen. It is made to happen. It is engineered. Now, the core component of smart money reversal setup is that your reversal setup must include these particular three things that I want to share with us. There must be alignment with these particular three things which I want to share. The first is the liquidity gap. The second is the market structure shift, and the third is actually our fair value gap, which is the imbalance return of price. The imbalance return of price. Now I'm going to be explaining them a little bit. I've done a video, a teaching on liquidity gap. I've also done on the market structure shifts. I've also done on the fair value gap. In fact, the video before this particular video talks about the fair value gap, so you can watch and learn. Now if you look at it well, look at what is happening now. The market makers are going the opposite direction in order to stop many traders away. That is a secret, so that they can stop many traders away. Now let's move on. The three things that I'll be sharing with us, key elements. The first is the liquidity gap, which is actually the stop on. Now this is where price break previous high or low to collect orders, to collect what? Contracts, to collect orders, to collect liquidity from the market. Now this is previous low. This is previous low here. Now price now is doing same thing here, to come here and click and touch people's orders, so that people will think that it is reversing, going for a sell, and before you know it, it continues moving up for a buy. Now this is actually the secret of the smart money reversal. Now what they do is to sweep off equal highs, sweep off equal lows, and bring or introduce what we call the fake out or the fake breakout. They introduce a fake breakout, and after introducing a fake breakout, you see there will be sharp spikes or weak in the market. And you see, this is what we are experiencing already. We see it here, we see it here. Now sharp spikes and weak in the market. Now this is the first sign smart money is about to reverse price. This is the very first sign that smart money, they are about to what? Reverse a price in the market. Take note of that in your trading career. Once you see this, put at the back of your mind that they are about to do it. They are at it again. They are about to what? They are about to do it. Then, after you have seen that happening in the market, the next thing that you look for is the break or shift of structure. Now, after the liquidity grab, the market must show a change in direction. Now, this appear as a break of the previous internal high or low, and then a displaced candle can come up and you will see a clear momentum shift. Now, this confirm that smart money has taken control of the market. Now, how is it? Look at my trade now. I'm going to change this color. I'm applying something now. Look at it. I say I love doing practicals, taking live trade and doing practicals so that people will learn directly. So that people will learn directly. I don't like look at it here. Look at my this one is my neckline here. Let me change the color to red. This is my neckline. Now the moment market makers break here, and then I begin to see all these things are just stop hunt. I begin to see price moving with momentum at this direction. It means that smart money has taken over. Right now they have not taken over. It is just retail traders that they are just playing around. We're just playing around in the market. You get it? We're just playing. It is just we that we're just playing. Retail traders were playing. But when market makers or the dealers or the smart money enter, you will see the move now. Now, for example, look at here. Look at here. You will know that this one they have entered. Look at the move here. Oh, look at here. Look at what happened here. You will know that they have entered long candlesticks. Now, based on the candlestick, once you see a displaced candlestick, there's displacement of candlestick, a break of previous internal high or low. When there's a break, which is a break here, now is actually a sign that the market makers or the smart money have taken over the market. That is one of the things that you should learn. That's one of the things that you should learn. Now, the third thing is the fair value gap. Now, the fair value gap actually happens when we have three candlesticks that are not having feeling with themselves. I'm going to drop the link so I will understand more. You watch the video, learn the teachings, and then you understand more about fair value gap. Now, once structural shift happens, price will pull back to a fair value gap, either a fair value gap or an order block. I also did a video on order block, or a supply and demand zone. Now, this is where smart money enters the real position. Now, this is where you enter your sniper reversal word trade and make profit like the smart money, like a professional. Now, you need to understand this thing. First of all, you understand or identify where liquidity is based on the highs and the low following the market structure. You can use the market structure, which is the high and the low. You can use trend line to get liquidity. You can use even support and resistance zone. And then you wait for what? For stop hunt. After the stop hunt, you see price we spike above or below the liquidity zone, and then a manipulation candle will form, definitely, because it will give you stop hunt. Then look for break of structure. That's a shift of structure, which price quickly what reverse. Now you will see a strong displacement candle which will definitely appear, and then which is actually the major thing. Then you mark the fair value gap or the order block. Now this is one of the major key. Then you enter your trade, especially if you see a pullback. But if you not see a pullback, you can still enter your trade and you make profit. Now I'll be showing you how
and why you should follow such kind of method at the end of this video. Now, how can you now avoid reversal, fake reversal? How can you avoid fake reversal? Now, the first thing is always confirm with displacement. Use a candlestick to confirm it. Displacement candlestick will tell you if it is a fake reversal. Now, the volume spike also will show you if it is a reversal, and then you must have a clean break of structure or a clean shift of structure. Now, don't forget to always use your stop loss and also your take profit. Now, your take profit should be at least up to three. Now, the first take profit should be initial liquidity. Initial liquidity. The second take profit is always the external liquidity, and the third take profit is the opposite side. That's either a swing high or a swing low. Now, look at this. I'm just showing you something here on this video. You see I'm having two blue lines, which is at my area of take profit, but for me to reach the third area of take profit, it has to be a swing high, which is at this place. Now, either I choose this place or I choose this place as my third area of profit. Now, this ensure profits scale properly without fear or greed. Yes, so that the market will not reverse, and then you can use your trailing stop loss in order to help you to move on a secure side. Now, to avoid losing trade, don't enter before the break of structure. Don't enter before the break of structure. Now I enter before a break of structure. That's why you see market makers are just playing with me. But you see the price is still returning back because it's actually going to buy. And then if you look at it well, um there is no displacement candlestick. I just entered it. Why? Because I'm sure actually that's why I entered it. But don't try that, please. Don't try that. Now avoid low volume trades such as and setup such as during the Asian section. Never trade the reversal of liquidity which has not been taken. Always trade with displacement. Confirm with higher time frame for more direction. Now look at it now. Um, let's check something. Let's check something. Now I entered this particular trade. I've been trading it. You see it. This one is Bitcoin. I enter buy. I've been buying. I've been buying it. And what actually gave me confidence to buy this particular commodity, which is the Bitcoin, is because of the smart money reversal. Now look at it. Now nobody tells me. Look at this region. Look at these particular regions. Now this particular regions alone speak volume. These particular regions alone speak volume. They are market structures. They are market structures. Now, when I've seen this, I don't need anything to discourage me that this will not go my own direction. So I obey it because um, I went down to the lower time frame and I saw that it was broken. The BOS, that's the break of structure, has taken place. Now let me go down to the 15 minutes time frame. Sorry, from the 1 hour time frame I went down to the 15 minutes time frame, and this was the break of structure. This was the break of structure. When I saw it and I saw this particular first candlestick that move up, yes, yes, this particular candlestick is actually the displacement candlestick. When I saw it, I was so excited. I knew that this is actually the key to my trade. So I enter the trade and look at it, I'm still on profit. I'm on profit. And also, this particular trade that I am will also lead to profit. Now, they might do all they want to do, but it will end in profit. Why? Because it will not go against the trend and the market structure. It will not go. So, guys, watch this video over and over. Make sure you learn many things from this video. Don't just skip the video. Watch it. That's why I took it gradually without shouting. Now, the smart money reversal setup is one of the most powerful concepts in forex trading. Once you understand liquidity gap, structure shift, and the fair value gap or the break of structure, you stop trading blindly and start trading with the smart money precision. Now practice this setup until it becomes second nature and watch how your accuracy improve dramatically in the next coming season of trading. Don't forget, if you learned something powerful from this particular video today, hit the like button so that more traders can actually watch this video. It will be recommended to them by YouTube. And then drop a comment section saying smart money mastery if you want me to actually continue doing such impactful um, videos. And don't forget to subscribe to this channel. And the next topic taking I'll be doing a teaching on is the swing trading setup for busy traders. The swing trading setup for busy trader. Now this particular one will change um, the idea of those that are busy so that they can actually be trading even in their busy schedules. Now see you in my next video. Have a great day ahead of you. Thank you for watching this video. Do like, share, comment and subscribe to this channel for more information.